a very proactive measure by regulator and also in this case by exchanges. In last couple of days, the regulator and both the exchanges in a sense are trying to really preempt and ensure that there is no systemic risk into the market, given that we've seen a deep swell and a very big I won't use the word froth, but a massive participation in the options market. In order to address regulatory issues and protect small investors from risk in index options, which in a sense has become very large in the last couple of years, especially after COVID, ET now has learned that SEBI has appointed an expert group on exchange traded derivatives. And it has started discussions on multiple proposals, which includes increasing margin or lot size. My colleague Ankur Mishra joins us with the details.
Yes, market regulator is definitely in action for checking and taking a balanced view in F&O. Remember, there was a committee which was formed by market regulator to check what are the opinions regarding the recent surge in volumes in future and options, and now we understand that the panel, the working group, is likely to submit its recommendations to secondary market advisory committee, which is set to meet next week. Now what are these suggestions? We understand that one of the suggestions has been to increase the lot size as well as margins. Remember, in the past there has been decrease in margins as well as lot size, although these preemptive measures has been taken by SEBI in the past, but due to increase in prices of the stocks, many times you would have seen that the lot size have reduced. So now the suggestion has come that the lot size needs to be increased so that at least retail participation can be checked. Apart from that, you would have seen that SEBI has been in action in past 2 to 3 months. There has been several measures, and one of them has been the uniform charges which needs to be levied on MIIs, so that while on one hand MIIs charge customers on a daily basis, but they pay exchanges on monthly basis. So in between they were getting benefit in terms of increased volumes, concessions, which was not passed on to customers. In fact, it was a kind of a discount brokerage structure which was created. Now all in all, it will impact F&O volumes, and that concern has been voiced by the industry participants. Apart from that, we have
Ankur, I need to just interrupt you there. Sorry for that rude interruption, because Vinod Goyal in a sense is just holding on to the phone because he's got one step inside the board meeting and he still managed to talk to us. So Vinod bhai, good morning. Thank you for joining us.
Good morning.
Good afternoon, sir. Sorry, good afternoon. Morning show नहीं, afternoon show कर रहा हूँ. Okay.
Thank you for inviting me for this interaction.
Okay. Vinod bhai, there is a ramp increased in options activity. Everybody is looking to everybody for solution. Exchanges are saying SEBI should do something, SEBI is saying exchanges should do something, and me saying we cannot do anything. What is the best way out to protect the interest of a small investor stroke trader here? Because history has taught us that too much of speculation in the options market has always had a bad ending.
Yeah, but the term small is very vague, or it is loosely used as retail investor. Now, nowhere it is defined. If we take it as a corollary that it is opposite of the HNI. So if we take the IPO criteria, up to 5 lakh application is treated as retail. Similarly, for buyback, the quota reserved for the retail is those who are holding shares up to rupees 2 lakh at the rate on the record date. So otherwise, you see, retail in the common parlance is the persons who are trading in options on the last day, actually the expiry day. The concern is more arising from the heightened activity in the last 1 or half hour of the expiry day because of the this vast revenue potential, which may be lost to others as well as it may be gained to others. As you know, for every trade there is a counterparty. So in share market, there is a chance of losing money, there is a chance of gaining money, and every time NSE has a tagline, सोच कर समझ कर निवेश कर. SEBI has a statutory warning. The stock investment in stock market are subject to markets. Mutual fund are also telling investment in mutual fund are subject to market risk, and now this 90%. So after that, if somebody takes an informed decision, it is up to him. But what for I was scheduled to talk to you is to the terms of this new circular, which is issued by the NSE clearing on 8th July, whereby the 1000 plus shares have been taken out from the approved list to be available for as a collateral to the clearing corporation or the professional clearing member. I think this may be a fallout of that, because the so-called traders or the retailers, they were putting collateral with the broker, who in turn sent
Fair
it to
point.
the...
Fair point. I will also encourage Deepak Shenoy to join in the discussion. I'm coming back to you, Mr. Goyal. Deepak, let's first address the headline. Indian options market currently are clocking volumes which are higher on days, which are higher than India's GDP. Option market has seen activity like never before. And we've seen historically, when the options market is dominated by a lot of retail activity, it ends up very badly. What is the best way out to protect the investor and also ensure that the market liquidity is not compromised?
So Nikunj, I think I would question the second part, that the whether options market retail participation being very high has harmed the option the market, because we've always had a retail run market for the longest time, both in cash and the biggest traders in the market on an intraday basis are retail traders, not not institutions. And even in options, that has been the case. There's a large amount of them. So I don't think there's necessarily a need to say that there are too many of them that are playing this market, and therefore we should stop it. But the bigger problem is that a lot of them lose money, and maybe they're undercapitalized to access some of these markets, which have extremely high forms of leverage. The reason it's higher than Indian GDP that you say is actually notional turnover, which is basically an option for which you may pay only 5,000 rupees. It is recorded as a 10 lakh rupee exposure. So it's a 200 time effective leverage on an option. That notional turnover looks very large, but the option premium itself is relatively small. A lot of option players are in that space, and I think we have the latest NSE Market Pulse has about 44% of volume in the options premium turnover alone is by players who have less than 1 lakh rupees per month, which is probably 5,000 rupees per day, which looks like relatively undercapitalized players that are playing this market. So in that context, increasing the lot size would probably make sure that there will be people who will have to put a little more money to play in, slightly more capitalized, because in an extreme leverage situation, you do require that people have capital in order to cover for extreme events. And that is unfortunately, something that the retail participant may not have. I think we should also account for systemic risk, because a larger number of undercapitalized players may create a systemic problem if there's a default. So that is another reason why you should kind of strengthen the market dynamics.
Shrikant Chauhan, one basic reason why the turnover looks strong is because of weekly expiry. You take weekly expiry and this whole arbitrage window out of picture, then suddenly the option numbers will look very different. Is there need now to perhaps roll back the whole idea of weekly expiry?
Yeah, good afternoon, Nikunj. I think, see, there is no point in rolling out the weekly expiry which currently is going on, because see, this market requires speculation also, along with the overall normal activity which is there in the market. So most of the time, what we see is that it actually strengthen the broader market, and that actually helps the market to do well in the long run. Yes, definitely, we need to increase, we can say, either lot size or we can increase the net worth of a particular trader. I think that criteria will help the market to reduce this type of speculation. But otherwise, I think that this particular market is like, it's something which is good for the long term. Yes, in the short term, and as Mr. Vinod said that yes, on the day of weekly expiry, on the expiration of that particular weekly expiry, we see substantial jump in the on the volume side. On that day, yes, definitely we can take some measures to control that particular activity. But otherwise, I think this particular system is going smooth.
Okay. Mr. Goyal, other aspect is stock lending against individual securities. There seems to be an indication that the exchanges, they really want to perhaps review that definition. That is what, my colleague Ankur has also just flagged off. What are your thoughts on that?
No, that was not the lending. That is what we are discussing on the circular of July 8th, in which the clearing corporation has identified 1,000 plus stocks, which will not be accepted by the clearing corporation as collateral with a different degree. That is not in one shot, but say from August 1, so much 40% of VAR, from September 1, 60% of VAR, from October 1, 30% of VAR, and from November 1, 100%. So what is happening, as we all discussed, the genesis of the loss was the leveraging, when these investors or traders, they put in the collateral with the broker, who in turn pledges it to the clearing PMC, professional clearing member, or they put to the clearing corporation. So what happens, ki there is no cash component, and what happens, just see, if I have share X and I give it as a margin, then again I am taking exposure against that. So that way, if that particular stock which I have given in the collateral, the price goes down on a particular day, or in the circumstances of the some happening geopolitical Indian, like anything. So if we take the case of, say, any company 1000 list, whose price is doing today 300 or 400, had gone down to below 30 rupees, 40 rupees in the COVID 2020 March. So that way they are concerned ki this is overloading the exposure. And the main criteria of identifying these stocks is that only those shares which have been traded for at least 99% of days over the period of past 6 months will only qualify. Now you see, there are 5,000 plus companies listed on BSE or NSE also, and this futures is available only on 250. Stock future is available on 250, and under the new consideration of this eligibility for the stocks to be traded in future and option, there is another criteria, of which there is another circular and other meetings have been held, wherein also these points are there, ki at least the market cap of those only the shares which belong to the top 500 will be eligible and considered in terms of those where the trading is done. Now coming to the 99% of days, means suppose there are in a year 240 days of trading, after deducting 52 days of Sunday, 52 days of Saturday, and other statutory holidays. So in the 6 months, you will have 120 days. Now, if some stock is traded only and all of a sudden on one day, all of a sudden on another day, and that means liquidity is short. And suppose in the case the default occurs, or the margin is triggered, or stop loss is triggered, and that security has to be sold, then if there is no sufficient haircut, then there will be total loss. And accumulating all these shares of different traders or the brokers, there can be a huge risk.
Right, Mr. Goyal. Mr. Goyal, thank you very much. I once again want to thank you for just joining us. I know you have to step in board meeting. So Deepak Shenoy, let's agree to disagree on few things. Would you agree with me that the options market activity is something where it needs supervision and no intervention?
Yes, I think we need to increase regulatory oversight, create a mechanism that the systemic risk is addressed, allow for such high leveraged traders to either bring in more capital to the table, either by a margin increase or by an increase in lot size.
Shrikant Chauhan, define supervision and not intervention.
Yeah, I also agree with you that yes, we need supervision. We need like to increase this particular uh, uh, in terms of like increasing margin or increasing lot size or introducing some more measures, but there is no point in discontinuing this weekly expiry schedule.
Well, Mr. Goyal, Shrikant, Deepak Shenoy, thank you very much. I mean, what we're just trying to bring is some facts on the table that there is a huge surge in the F&O activity. Depending on the cut you look at, the volumes may look slightly different. But when markets are going through this extraordinary period of advantage of liquidity surge, money moving back from other asset classes to equity, digital platform, ease of trading, convenience, then automatically you will definitely see a surge in the options market. The red flag here is that options market historically has told us that 8 out of 10 trades or 9 out of 10 trades, at least when done by retail investors or by small ticket traders, they've not resulted in good profits. So what the exchanges are pretty much trying to do and the regulator is trying to say is the obvious, which is that understand your risk. Don't get carried away because of momentum. Know what you are doing, and there needs to be a little bit of hurdle change which needs to be done in order to ensure that this entire freewheeling move which is there in the option market, it really needs to be in the broader framework of risk management. That I think is what we just want to bring out in the scope of this entire discussion. Let's take a break, half an hour of market still left.
If you like this video, then like, share and subscribe to ET Now.